Hello and welcome again at Stocks Advisor channel. Here at our channel we are looking for interesting buy opportunities for US-based stocks. Today we will talk about Twitter Incorporated, traded at New York Stock Exchange, ticker name TWTR. Twitter is a stock that, again, as many others we discussed on our channel, does not require any introduction actually, but what we can say about Twitter overall, of course, it's a stably growing company, and after COVID times anyway, it was growing very well with very clear upwards channel here, of course with some volatility that was observed in June, July, but then it recovered and then movement upwards continued. And in that sense, if you would speak about the latest latter actually channels, upwards channels, then it's clear that we can see this one, let's call it T1. And overall, Twitter is a company that grows well, and it forms so-called 20 to 50 to 100 allocation of moving averages, meaning that until this is like that, the company will grow. And this we see at least last 3 months taking place, and the company is growing well. So for mid-long term, it's a good company to buy at any reasonable price. But if you're like more short-term player, you need to catch a wave, and then you need to look when the waves are ending, closing and starting, and then actually how the moving averages are behaving. And before doing that, let's first know that we have 3 moving averages also depicted here on this daily diagram, and these are moving averages 20, 50 and 200 being green, blue and the red lines correspondingly. So what we see here, it's an interesting combination of news and the chart situation. So the most importantly, of course, we saw starting from July that the price went all the way up with the wave. Then in the middle of September, the trend T1 was reconfirmed. Then again, we started second wave. Again, it was reconfirmed in the middle of October. And then we started with jump. We were volatiling almost 1 week here. And then seemed like the price was going to repeat the pattern that was observed also in the beginning of September. Here, so meaning that we will volatile a bit, then do some spiky up and then correction towards trend line 1. Similar situation was here, volatile, spike up and movement to correction, but then suddenly news kicked in and we see the price today jumped up, and it is actually a upwards candle that gave 8% for Twitter, for company of this size, 41 billion market capitalization. It's of course huge, but now what we see, the price started to plunder downwards, so it's minus 5% currently. So the news are coming in, and with this we see, okay, there's a mismatch, clear mismatch of what was expected for price action and what is happening. And now what is happening, it's overreaction going upwards and immediately coming back to what we had yesterday. So we are already at 50, and most probably the price will continue going further. Actually, already it's minus 8% while we speak, so the price is really declining. So it is already here. And now the thing is that this normal action that was seen yesterday and should actually continue further, slightly maybe piercing towards moving average 50 and finding its stabilization on this support of around $43, $44. Now this action was disturbed by upward jump and it's now going down, meaning it will create even faster movement most probably. So at least the next post stop will be somewhere about 43 on this support line. In this case it will work probably as a volatility line. Still unclear will it hold the price or not, because we were there already like 2 trading weeks ago, in about middle of October, about 15th of October, and therefore most probably the price will actually, after some volatility, will go further down, and only then it would be wise to think of entering or re-entering the position, opening any positions here. And if you look of those prices where it could go, so we need to see the next support lines. So the next support level is actually here, and then the further one is there. And it's indeed very unexpected and sad move for Twitter, although every internet-based company is actually due to second wave and their expectations to growth were very high, because more and more people go to internet and use those internet-based services even more. But we can see that momentarily price is really declining, and we will see by the action of tomorrow how far it will go down. But again, most probably the first entry would be, so if this is V1 volatility 1, then S1, S2 and S3 lines, then the first real stop will be somewhere in the vicinity of S1, and that's where it will be advised to make a first to open a first position somewhere. Anything between the channel S1, S2 would be the first slow entry, and then should the price go down, actually you can take another chance, but most probably it won't. But even if it does, it will be anything below in the vicinity of S3 channel, because here also we will have moving average 200, this red line working as additional support, and then it will work as double support, so it would be quite hard to pierce below moving average 200 and S2. But if happens, it would be nice to average down. So having said that, this would be advised as a first entry. Second entry, again, average strategy would be here 1 to 2, meaning like you make a first buy with 1 portion and second buy with 2 portions to average down. Then you should be just below moving average 200 with your price. If we go to the second circle, and then we should see some recovery. Should we start recovery or upwards move actually below S2, then S1 V1 will be the exit channel, let's say, because V1 will definitely work as a resist line here. Should we restart somewhere from the first one, then we can even go all the way upwards to actually either V1, or here's clearly seen then another resist line forming actually today. Let's call it R1. So all the way up till R1 movement can be happening, and it would be advised to sell between V1 and R1 if we start from the first circle. So this is it for Twitter. Really, let's say, pity situation that it was kind of going for correction, then it was distracted from this move, and now this big disappointment. Price is dropping, plus, let's say, delayed correction move, so it will be like a double punch, and the price might go quite deep. So, but for those who wait for this, who expect, who knows how to play those kind of situations, it also opens nice opportunities. Overall, Twitter, of course, should have quite nice future in general, of course, and the recovery is not behind the mountains, so it's just behind the corner, and most probably what it would form here is kind of zigzagging upwards move. So the price, so T1 trend went like this, now will be like a stronger correction, then we should go again up, and this is most probably what will happen. T1 some correction, and T2 should happen. So with this we finish discussion about Twitter on this episode. Please do not forget to subscribe to our channel, watch our videos, other videos on our channel, and see you at another episodes at Stocks Advisor.